What is happening to the housing market and how is that going to impact the housing market upstate? Or in fact, like, do the national trends, the rising interest rates, what are the things that are going to make things more or less expensive, make buyers more or less likely to buy, make sellers more or less likely to sell? Um, we are in a time of nonstop headlines about the housing market all over the place, including in our local areas. And so I thought it was extra important to hop on and do a market update today. So welcome, everyone. I am Megan Brenn-White. I am an associate real estate broker with oh my God, I forgot where I work, with Keller Williams Realty, Hudson Valley North, and I'm the head of the Upstate Curious team. And to give you a sense of our, where we work, so you can see the sense of the local market, we cover a lot of the areas that particularly second home buyers from New York City would consider, which now is up to 9 counties, essentially anything pretty much above Westchester on that side and kind of above Rockland County, although even those two are getting a little bit blurry, all the way up to below Albany. So Ulster, Columbia, Sullivan, Greene, Delaware, Putnam, Schoharie. I'm sure I'm forgetting a bunch. So we have a pretty broad view of the housing market up here. When we talk about a local market, it's an area that is enormous, but is very interconnected by the connection with New York City in a lot of ways, and changing trends of work for home, et cetera. We are very much committed as a team to learning and staying on top of things and looking at our own internal data. And I did look to see that we have, just to give you a sense, we have 128 clients that we have 128 closed and pending deals for this year already. So that is, that's a big chunk. Like if you look at the actual market size, we get to see a pretty significant share of the market just within our own team. We also get to see for each one of our listings, there might be 30 offers submitted, or 15 offers. So we get to see how those offers look. And we very explicitly talk about that. When buyers agents on our team lose a deal, which is still happening a lot, we also talk about that. We talk about if they found out any information about who won, how much it was won for. If they won a deal, we ask them to share that with the whole team also. What did it take? So we have a lot of our own, mostly qualitative data, I would say. Like we haven't been tracking it, 100% rigorously, but we do it enough that we can start to see things that are changing. And what I want to say first is that there is no one nationally or locally that's predicting a crash. Literally no one. Anyone, well, I mean, I don't want to say literally no one, because I'm sure there's like one guy out there like, it's a crash next year. So save your, houses will be 70% less. But basically, no, I have not personally encountered any reputable sources or analysts from banks or mortgages or real estate sector or the government sector that are saying that there's going to be a crash. What the general consensus is that the rate of increase will slow, but still to above average rates. So, people are kind of talking about this year, the national prices could still go up 5 or 6%, which is higher than the 4% average. It's funny because 5 or 6% starts to sound like, oh my God, this is like basically a housing crisis, but that's only because we've had these very, very weird couple of years where the prices have gone up. I mean, the prices are up almost 40% since 2020. That is a huge, unprecedented, and not entirely unwarranted change. So that's the first thing. I just want to get that out of the way. So if you purchased early in the pandemic, Scott, I don't think you need to worry about, I don't think anybody needs to worry about prices going down. I think we're actually getting to a more normal market, which is great. Where buyers can see a home and maybe buy it. sellers can sell their home without 4,000 people coming through their house and people trumping other offers, sort of. And this is the sort of part which is important, is that because we deal with this subsection of the market that deals with kind of second home buyers and increasingly full-time people who are earning their money not in this area. So people who can work remotely, essentially the huge work from home trend. Those, I say this every market report, like if I could segment that out and see what was happening to that specific market, I would, because it does not behave the same, I don't think, as the market as a whole up here. So I think that it's probably, so I think that the news of prices slowing down a little bit are probably even better news for people who are, really facing a serious affordability crisis here and want to buy just like a sensible family home in a neighborhood, which is what for the last 2 years, every home was kind of fair game to people who had more cash, wanted to invest, whatever. And now I feel like it's going back a little bit to the homes that are these really, nicely designed homes with a view of a waterfall, or specific characteristics that feel attractive to that section of the market that has generally more resources. So I think that is good news if you're not as worried about having, the fancy designed home with looking at a waterfall. It is not such good news, because I don't think that, that what's happening in this subsection of the market is that there's no inventory at all, almost, so people are really kind of going wild, still bidding things up. And that was actually, so in addition, my second point that I wanted to make about you're good, don't freak out either way, buyers or sellers. But the other thing I would say is that this is a time period, this reminds me of maybe the first 6 months after COVID, maybe even the first 9 months after COVID, honestly, where listing agents did not know how to price homes. We were all just I have no idea, we have no idea, are things going up? Are they going down? So we're starting to see some really, I think, some really weird pricing differences, where I think some agents are already pricing in what they see as a shift in this market also. Some people are not. And so now more than ever, and this is annoying if you're a buyer, but that the listing price is, we always tell the buyers we work with, the listing price is not, you should not determine whether you feel you did a great job or a poor job at negotiating based on how much higher or lower it is compared to the listing price. The listing price is pretty damn random at this point. So there was a home last week that I think was listed for $225 or $250 that went almost for double. And we saw that house and we're what on earth? There's no way, we would have listed it at easily $100,000 more. So we probably still would have had multiple offers, and it would have, but it wouldn't have been they got 60 offers. So I think that that's one thing to really remember in our local market up here, is that these are just humans pricing things, and they're humans. We agents do not actually set the prices. We advise our clients on the right prices. So that is the other aspect here. So sellers, some of you who are here, sellers see the same news headlines and are either or they don't see the same news headlines. Maybe they're thinking of the news headlines from 6 months ago, which were 50% year-on-year price increase, whatever, and will insist that my house is worth this no matter what. Other sellers will see will be holy crap, the market is it's I read something on, Facebook that the market is tanking. So we have to list my house really a lot lower. So that's an important thing just to know when you're looking at individual homes, is that I do believe that there's more randomness, I guess, in the pricing. And we're feeling it too. When we look at pricing a home, we're is this different? Should we price it in differently? Which homes should we which home should we change the pricing for a little bit? Because one thing we know as listing agents is that if you price a home too low, well, okay, let me rewind. One thing we have known the past 2 years as listing agents is that if you price a home too low, you would have a bunch of offers and the market would correct for it. Right. So it's like, it doesn't kind of, it like didn't, it wasn't really a risk. It was much higher of a risk, in my opinion, to price too high and sit on a market where nothing was sitting. So now, you know, we maybe don't know that, you know, we don't know if that's as true. I think it is, you know, our last house that we, the last home that we listed had, I think, 55 showings in the weekend, and, you know, a bunch of offers is going way over ask. And so that, I mean, that feels like it could have been any time in 2021. So I think that one of the big things here, I wanted to share this with you guys, if I can pull it up first. Obviously, one of the huge things happening here is the change in interest rates, right? That's kind of like the big question, because it's literally the Fed being like, we want to slow down the economy. There's too much inflation, right? So they're doing this intentionally. And the change in interest rate, now this is a little chart that our brokerage gave us. So this is going from January of 2022 to April 21st of this year. And you can see the interest rates going up from 3.22 to 5.11%. And I mean, this is, if you think about people who are buying homes in 2021, 2020, like there were interest rates. I mean, most people were getting interest rates below 3%. So this is even more dramatic than it is, than it looks. So if you had, you know, if you wanted to have a $2,500 monthly payment in January, you could have bought a home that was $576,000. Now, just a couple of months later, you can only buy a home that's $459,000. So this is a big deal. Like this, and particularly at I would say the lower end of the market, this is like pretty crushing. So what we are seeing are buyers who no longer qualify. You know, they maybe got their pre-qual in January, we're looking for homes. Let's say they even followed our advice and we're looking at homes up to 525. We were working with them and we were like, let's just look for a little bit lower so you could win in a multiple offer situation. All of a sudden, they can't even come close to affording that. And that is pretty terrible. So we are seeing some people coming out of the market at the lower price points who are price sensitive. And that includes, interestingly, some investors. So investors have had a big role to play in this market nationally. And again, like, let me just go back and state that like these are huge national trends that relate to a lack of, you know, really insufficient home building over the past, basically since 2008. And a number of other things. That's one of the really primary ones, though. Like, we are millions of homes too short nationally for where we should be. What is tough about this interest rate story is that inventory is already low. When you have people who bought during the pandemic, or maybe they bought a few years ago, if they had an interest rate of 3% for their home, now when they want to buy a different one, they're facing a higher interest rate and significantly higher prices. So this is probably going to lead to even more inventory shortage, which is pretty terrible, unless you are a seller, because I think that if you have a great house on this market where there's so few homes, and I'll show you guys the statistic for Ulster County. It's like kind of amazing. Then actually you're probably going to do pretty great. That's the truth. If you have if you have a home that is desirable. This, my guess, will lead to, we are already seeing cash buyers winning a ton of the time, or people who can waive the appraisal contingency, people who can waive the entire financing contingency. I think this is going to lead to more of that, because this, the higher interest rates obviously hurt people who are getting financing or getting a lot of financing. It hurts it a lot more. So if someone is on the edge of being able to qualify, and then, we have to tell them as our agents, like, hey, now we have to look at homes that are over $100,000 less than what you were looking at 2 months ago. And that probably means, honestly, that same home would have been $250,000 less 2 years ago. It's pretty disheartening. That's the honest to God truth. So I do feel like, interestingly, I'm gonna stop sharing this for a second. I think that weirdly, it's also a really good time to be a buyer. If you find a home that you like, it's a good time to be a buyer. It's not a good time to be a buyer because there's not a lot of homes out there, but that is a huge part of why we work in such a big area, because if you look in the whole, like, there are so many wonderful places. And if you look across the whole area, we are absolutely still finding homes that are awesome and that are a little under the radar. And then if it's not one that is like the sexy home of the week, kind of, you probably are going to have less competition. That is my guess, especially at like 500 and under price points. And so if you're like bummed about, like, oh, I was looking at like up to 600 and now I have to look only at like upper fours, likely, the chances are that you might still even end up in kind of the same place, because hopefully, like multiple offer situations, the upper fours before might have escalated up into the upper 500s anyways. And now you might be able to get something a little bit closer to that asking price. If it is not the like, 3 or 4 homes that we see, and it really, honestly, it is. It's not like 10 homes. It's like 4 or 5 homes per week. Depends on how many listings we have, and then plus a couple other ones. I'm just kidding. There are other great listings out there. We find them, absolutely. But the homes that are getting a lot of attention are still gonna get bid up a lot, I think, if they're priced accordingly. So let me give you guys. Does anyone have any questions? Oh, is this worrying sellers? Right. So what I would say is that sellers are starting to get worried, which is interesting. So I would say that like that puts the buyers who are in this market in a much better position, because they actually might be able to start to negotiate things like these things that we've had to do over the past couple of years of like waiving any inspection negotiations and like all this, this stuff, because it's been such an extreme seller's market. I think that buyers, that sellers are worried that, we are already advising our sellers that they may need to be prepared to be a little bit more flexible than they would have been a year ago. And I'm going to say that I don't know if that's true, because again, like, I think what we're doing is shrinking the whole pool. Like, there are fewer sellers and fewer buyers. So it may still just end up being as like rabid for those houses. But so if there are things that are like less desirable about your home, I think that is where people might start taking, like, where 2 years ago they would have been like, I don't care, great, I'm like next to a nuclear power plant and the roof is upside down, like I can live with that, offer. Like they, people like literally just like didn't care. Like I think they're looking at things a little bit more carefully now. And keep in mind that buyers also, like, they're not the only, like, they live in worlds as humans too. So they're going to have their parents or their friends or their like great Aunt Frida, who's a real estate agent in Arizona, telling them all about the housing market upstate and whether they should or shouldn't buy. And those people are reading the same national headlines and not knowing how to apply them to our local market, to whether or not something is a good purchase or not, in terms of, actual, whatever your goal is. Which is, by the way, if you want to just buy a house and live up here because it's awesome, or buy a house and have, come up here for a second home occasionally, rent it out occasionally, still awesome. none of this impacts you. Like this stuff, I think the short-term housing stuff only impacts you if you are the fluctuations in the housing market that are going to be more short-term only impacts you if you're flipping, if you're about to sell, if you are, if you're going to buy. Well, no, I mean, that's basically it. If you're going to sell soon, because if you, or if you truly believe that me and everybody else are completely wrong and that prices will be like 50% of what they are in 3 years, and then you should wait. But yeah, nobody is predicting that. So now it's just more of a matter of, do you want a house? Why do you want a house? Let's get it done, and if you're keeping it for 5 years or 10 years, literally no one has any idea what's going to happen by then. Right? Nothing. No one has a dang, none of us could see that far into the future. Although when you do look further into the future, our area looks like an amazing bet because there are climate reasons. Like we have a lot of water, we have temperate climate. This is like one of the places that people think will really still be pretty livable as the climate changes. We have new businesses moving into the area. I mean, there's a huge cannabis company coming to Ellenville with like 400 jobs, and that's just like one. There's huge things coming to Kingston, all over the place. So the area is still thriving. More and more amenities attract more and more tourists and weekend homeowners, and will continue to do that, I think, who then attract more amenities, who then attract more, homeowners. So I think that, like, let me just show you guys a couple other statistics here. I could have like done a whole PowerPoint, but who's got time for that, really? Just kidding. I totally did have time for it. I just didn't do it. Oh man, that's funny. Oh, here we go. This is what I wanted to do. Okay, so I'm just using the Ulster County Board of Realtors as an example. You guys are all right in front of my monthly indicators. I don't know why that thing. So here we go. So the Ulster County Board of Realtors is an interesting one, because you would think this is just Ulster County, right? That's what the name would tip you off to think, but it's actually probably the biggest multiple listing service, or the Board of Realtors, that covers the sort of Catskills and Hudson Valley area. One of the reasons it's difficult to get statistics here is that there are a number of multiple listing services. Our team belongs to 5. They don't always share information, and some people list in multiple services. So Ulster County is an important one. So I wanted to really show you this one. You can see it says right here, this is residential activity in Green, Dutchess, Orange, Sullivan, and Ulster. So this is the big number for me that's like kind of wild, like minus 44% change in homes for sale. I'll show you some other statistics, but let me just point out again that there were not that many homes for sale to begin with. And this is particularly where, when you take the small housing market, like the small numbers here versus the huge numbers of people who are potential second home buyers in New York City and potential national investors and people who are hearing about this area. Increasingly, we have clients from California, from completely other places who are moving here. So this to me is the latest information. Well, and I guess I should also say 2.7% 1 year change in median sales price is again, this is very different from we've been seeing these 30%, yada, yada. What I would say, and what's important with these statistics, which are always so confusing, is that it takes so long to close a dang home here that an offer is made usually 3 months before it closes. And that whole time, in those 3 months, it's pending. And we don't know till it closes in this data if it closed higher or lower than the accepted offer. So some of this stuff is kind of weird. So I try and look at some more of the future looking ones, but this is, year to date, 380 new listings for the Ulster County Board of Realtors. So again, just think about the number of people looking for a house upstate, possibly your friends and family, and then take that 380 and divide it and say that 20% are ones that would be of interest to them, you were looking at a tiny number of homes that have come on the market since January. I mean, this goes from January to the end of March, so it's the first quarter, but that is still tiny. And we looked in April, April definitely has a little bit more. I have some of those statistics too, but it's like, this is not a lot. And this is why I think when people talk about like, when I think about, and our team talks about like, how do national trends impact our local market? It does not take a ton of people working from home to totally change things, right? If like 100 new people want to work from home and enter the market because of that, that is a quarter of the homes that just were newly listed since the beginning of the year. So this leads to lower closed sales, right? Like 25% lower closed. There's just like fewer things are happening because there's not as many, there just aren't as many homes on the market. The median sales price, year on year so far is actually, so if you look at it for the whole year, is actually up 9% year to date. So just for March, it was 2.7% since last March. But if you look at the whole year to date from January to the end of March, it's 9%. And same thing, the average sales price, average price is a little bit higher. Percent of list price received is over 100%. Here, year to date, it's close to 100%. So, and again, I'm going to submit to the jury here that I think that it's some houses getting 175% or 125% of the sales price, and some houses getting 10% below the sales price or 5% below the sales price. We are not seeing many things be discounted. You're kind of lucky if you get right at the 100, actually. And this is like the inventory of homes for sale. Like this is what is wild to me. So it's like last year in March was 643 in this whole multiple listing service, which is still small in my mind. This year it's 359. So what is actually happening here statistically, the month supply of inventory is one of the key indicators of whether something is a buyer's market or a seller's market, at least until the end of March. This is a seller's market. 6 months is the breaking point. So we are nowhere close to that. This is still like a wild seller's market. So even though I'm saying buyers might get pickier and stuff, I think that sellers who have good properties are I think buyers who can compromise a little bit may have more negotiability because some things that aren't perfect might have a little more flexibility. Sellers who have great properties can still get great prices. Yeah, so you can see 2020 March, so we're just like starting COVID here, there's 535 listings. There was one other one that I wanted to show you guys. Days on market to sale. Well, I think honestly that this indicates a switch to cash as much as anything. So, because you're quicker. This is where still, like when we see the 9% or whatever, I'm like, great, or 2%, because you're looking at just huge price increases from 2020. So 2020 median sales price was 240. Now it's 354. That is a very, very, very big change. Average sales price. Okay. So we looked at most of these things. Yeah, this is the one I wanted because this is 2020 also. So 2020, we had 1,000 homes for sale in this month. Now it's 359. And this was already 10% lower than the last year, probably because of COVID. And I'm going to tell you, because I was working here then in 2019 and 2018, we were like, God damn it, there are no homes to sell. There's no inventory. Everyone's keeping their homes because of Airbnb. And that was actually the story, kind of, was that like people aren't selling because they don't have to, because all of a sudden they can rent and make some money. And why sell if you don't have to? You could keep your home for a million years. Like before, there's a huge, nobody knows the exact percentage, but there's a big percentage of homes here that have always been owned by weekenders. If you were a weekender in 1995, if you were not using your home, it probably was vacant. if you're a weekender in 2022, if you were using your home on weekends, you could be making $50,000 a year just by renting it occasionally. So that is a completely different world. And that's what we were talking about in 2019 and how it was hard to find homes. Then now you look at that 359 homes versus over 1,000, it is dire. So this is where, March 2020, we had the 6.2. This is where it switched from being, this is literally like when we're watching it switch from being a slight, a balanced market actually, to a very, very, very extreme seller's market. Just scooch this over here. So this is this one's a little bit more confusing, but well, no, it's okay. So you can see this is more recent statistics from our brokerage. So this is for April. So basically in April, so keep in mind, April is the month that people start to list things again. So this is where our market really goes up. So this is where you normally see, a lot bigger. Let's see. Well, last year, it actually didn't even really change. February, 556, March, 395. But then by April of 2021, you're at 391, 439, 463, 507. It's getting higher. Here, it's just getting lower. It's December is 355, January is 296, March 238. I think this goes back up to 260. This I think will be higher by the end of April. It will definitely be higher in May hopefully. Average price per square foot is also interesting. These are kind of ugly graphs, but let me just show you April 20 to April 22. The price per square foot average for sale was 218 and now is 307. But the sold price per square foot is a more dramatic change. So the sold price per square foot is up 47% since 2020. And I think this is because, people who, I think that again, people who are buying, who are living in urban settings often want, they don't want bigger homes. We've always told our buyers, do not look at price per square foot. Don't even look at it as a relevant statistic here. The appraisers will. So we have to look at it for that. But it doesn't matter. The numbers of bedrooms and bathrooms really matter to most of our buyers. Most of them do not want a 4,000 square foot home because it's too big. But they want a third bedroom to have as an office and a guest house now, or a guest bedroom. But this as a statistic is pretty interesting. That is a significant increase. This one just shows, well, I don't want to, this is the sales absorption. So this one was also interesting. So this goes back to the balanced market stuff where you talk about how many months it takes to sell every home that's currently on the market. So if it takes 6 months, you just literally divide it by divided by, oh my God, I'm having a total brain fart. 12, 32. I have no idea. Anyways, you figure out how many months it takes to sell the current homes on the market. And then you get that statistic. Sales absorption is similar. And it's the sales absorption is the number of, it reflects that as a percentage instead of a number of months. The percentage so if you had 1,000 homes and 10 were sold, it would be a sales absorption rate of 10%, 1%. Oh my God, literally, I can't do math on the fly today. 20%, by the way, is what's considered a balanced market for sales absorption rate. So what's interesting here is that if you look at 2021 to now, it's actually getting worse. So this is actually getting worse for buyers. So over 20% is considered a seller's market. Buyer's market, sorry. God dang it. Y'all gonna have to do opposite day on this thing. But this is getting to be, which makes sense because there's so few homes on the market. And so it just is a mess. I'm looking Johnny and Scott, who have always been here laughing at me on these things. Thank you. Thank you very much for appreciating my very poor on the fly math skills. And then I just wanted to like just show you like quickly, be like, you know, these are the headlines that everybody's reading. This impacts things, you know. So I mean, this is just one that's actually pretty like moderate. There was another one from Reuters that was kind of interesting too, because like a lot of the ones I see will be like, housing market crash, is it coming? And then they're like, nah, it's not. You're good, you know. So Reuters had this one, which was like, home building sentiment dropped to its lowest level, you know, ever, like national blah, 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 4 straight monthly decline. But then it turns out that it's dropped 2 points to 77. And a reading above 50 indicates that more builders view the conditions as good rather than poor. So 77 is still great. More importantly for us here, this is regional. It rose in the Northeast. So home builder sentiment in the Northeast is actually higher than it was. But again, when someone's like dad, it's always fucking dads. It is. When someone's dad like reads a headline, they're just going to be like, oh, whoa, look at this. Home building sentiment drops to 7-month low. And just be like, that's it. You shouldn't buy a house. And so that's like, you know, that's kind of what we're dealing with. So new construction, I have 2 questions about new construction here. So people are building new houses, 100%. We're representing a great development in Stone Ridge. And what I would say is that the feedback that we've gotten so far is that, well, okay, let me put it. So basically new construction is great in a certain way, but you have to wait. You have to be like real okay with delayed gratification, right? So I think that what is true now is true, has always been true, which is that people would rather have something that's built. And so it's a little bit harder. Like, I think that some of the, you know, and we've been talking to other real estate agents and just to see like what's happening with the new development that they're representing. And it's like maybe a little bit slower than it was 6 months ago or a year ago, where people were just like, hell, we need a house. Like, we'll do anything. We'll wait a year for it. I think that is like a terrible idea from the buyer side. If you can wait, I mean, and also like everybody can wait. I mean, pretty much everybody here is buying, you know, like in these markets, like that we're talking about, a lot of people are buying second homes. So it's not like they have to move in tomorrow. And the rental market is tough. So like, if you do have to move in tomorrow, you know, you probably have to just buy a house that's already built that is going to have some compromises pretty much. New builds, one of the things that's interesting is that your interest rate gets generally, like, talk to your banker about this, but it's locked for, you know, until you close. So if interest rates go up to like, if you wait a year and are like, let's see what happens to the market, prices go up. And if interest rates go up to like over 6%, which could happen, the new build folks are going to be sitting pretty locked into a house price and interest rates that will look kind of low, I think, you know, and these interest rates are still historically low. I know everybody like says that. So I want to like also say that, you know, 5% is still very cheap money. So it really, really, really is. So I think that the good thing for anybody considering construction and new builds is that, because one of the things that had happened for a long time was that, you know, and it's still sort of the case, but like contractors and tradespeople were in such short supply. Still mostly true, but the rise in interest rates had already started to impact that by last fall, because, oh, you wonder, people are not refinancing to renovate as much, right? If you could refinance your home to like 2.5% or whatever, get a big bunch of cash out, then you're building a pool, you're building a guest house, you're building, you know, all kinds of things. We refinanced this home in December, we closed it at 2.9%. You know, so that is like, I wouldn't do that again, you know, like, so what, like, I'm not refinancing to 5%, you know what I mean, to take cash out of the home, like nobody would do that. So what that has also meant is that everything is going more smoothly in this market. Like the title searches are quicker. The banks are like, have, you know, fewer people like frantically like on them trying to do a million deals. The attorneys, the inspectors, like literally everything feels a little bit easier, which is fantastic, because for all of these things, we were not just competing with other home buyers, we were competing with this refinance and renovate kind of crew, which was huge in the past couple of years. So I think so if you were looking at new construction, there are still supply chain stuff. Everything went up and, in money, and all that is still true, but we're seeing things being, I think, finished more quickly, finished more easily. Like, it's just like easy peasy, in a lot of ways. Like, that is if you are working with a builder who has experience, and, you can spec everything out in advance. It's one of the things that I love, like Neville House, they have, you just choose, like, everything is right there. So you're just like, I would like a different countertop or not. Like, you get to the point of contract and really breaking ground very quickly. So I think that it's and I think that a lot of people, and this is what I would say, is that some people just don't want to do it because they're like, meh, it's annoying, don't want to wait or whatever. So for the people that do want to do it, I think that they're going to end up with homes that in a couple of years look like incredibly good value. So especially because there's new build warranties, there's like all kind of stuff that goes with new builds that are great. Like, so you just have a different kind of peace of mind, and we need all the new builds. So anyone have any other questions? I'm going to look at the other things I wanted to mention here, which is just, right. The last thing really is changes to the rental market upstate, because that is one thing that I think could impact pricing, which is that as towns regulate Airbnbs, short-term rentals, which they are doing, and as uncertainty kind of comes into that market in terms of how that's going to play out in different places, I think that's going to be less attractive for investors, or even people who buy a home, like who maybe a year ago could justify a home that's like a little bit of a stretch, because they'll be like, oh, we can just Airbnb it like when we're not there in winter or whatever, or like a few weekends a year to like make up the difference in the higher interest rates. If they're also worried that the town is going to stop allowing short-term rentals or significantly restrict it, that becomes a much different financial decision. And that is also impacting investors, all of which it should. I mean, that is like the point. That's one of the points of these regulations, is not to have people's homes priced as hotels, essentially. And the other thing is the good cause eviction laws. So that is, I've mentioned this I think a couple of times, but for those of you who are following this, there's new laws about long-term rentals that will make it, that are intended to protect tenants, and they will. So tenants during this process, this whole crazy couple of years, if your place gets sold, you're always allowed to like ask a tenant to leave if the house gets sold. The buyer has to like keep the terms of the lease until the lease ends. So that's true. But then like after that, you could be like, okay, your lease ended. Now, like, I just bought this house for 3 times as much as the last person, so I do need to raise rent to even cover the mortgage. Well, good cause eviction laws, which have passed in a number of towns, or are being passed in Newburgh, Kingston, Beacon, other places, we're looking at it possibly countywide in Ulster, it would mean that the landlord could not evict tenants except for cause. So even if you bought a house and you had somebody paying significantly less and it didn't cover your mortgage or whatever else, it doesn't matter. They have to have actually done something wrong, which protects the tenants. And you can see from the tenant perspective, that's amazing. From a landlord perspective, it sort of functionally kind of turns everything into rent stabilized housing, kind of like how you have it in New York City, where you have like, you can only increase it 5% a year. And if you want to evict a tenant, you have to go to court. So even if like they have a 12-month lease, the lease is up. If you want to like have them move out, you have to go to court and say why, they should have to leave, and there has to be cause. So we used to tell folks, hey, if Airbnb stuff, if you can't Airbnb it, you can always rent for longer than 30 days. Those aren't regulated in the same way. there is a very robust market up here for long-term rentals and for like short long-term rentals for like 3 to 6 months or whatever. But that is a different, I mean, I think for some landlords or some people who are buying homes, they're definitely starting to think about that particular law as a potential risk.
Sorry, Megan, I can't seem to find the button that will
wait,
allow me.
I think you're on mute. Or can I just not hear? What am I doing? 1 second, 1 moment. Okay. No, it was
Sorry,
me. You go.
I just couldn't find the button that would allow me to put in a chat. So I tried to unmute myself. But so effectively what you're saying is, can the landlord not just put out a new lease with the price that the landlord wants?
No. 5% is the maximum.
That's New York State?
That is going to be anywhere that enacts this. It's called good cause eviction. So you can just Google, if you Google good cause eviction, you'll see like all kinds of stuff written about it. And the thing that's weird is like, I mean, obviously, so if somebody bought a house, in 1970 or whatever, you know what I mean? And they're renting it. If somebody bought it now and it's worth 5 times, like it costs the new buyer 5 times as much, they technically can't charge the same amount of rent. Otherwise they will be just losing money every month, probably, unless it assumes that like, it kind of assumes that everybody charges the maximum market rate rent, which I don't think is true. I think someone who owns nothing on their house might not even really know what the market rate rent is. And they may be like, okay, well, yeah, 1,100 sounds good. That's cool. Whatever. The person who just bought it, whose mortgage is 1,800 a month, can't just, charge the 1,100 a month. So I think this is something that is very new, and we're not sure how far it's going to go, but I think unfortunately it may actually lead to a real decrease in long-term housing because, we've seen people who have been like, I don't want to buy in these areas because we're afraid of this law. Well, not because we're afraid of it, but like they literally can't afford to do it. So if there is an existing tenant in a house that you're buying, you're keeping that rent rate. So it's literally like buying a rent subsidized apartment in New York City, basically. But everything, all of a sudden, simultaneously.
But you could move in yourself as a buyer. You could say your lease is expired and I'm going to live there.
I think that you could, I think there are some, so again, it depends. So, and I should say this, it depends on the different areas. There are some provisions for if you want to move in or if your family wants to move in. But for some of them, I'm not sure, basically, I would say. I was looking at this because also like I was thinking about buying something or I did buy something that I wanted my dad to move into someday, and I was like, what if like my dad started to have mobility issues and we couldn't move the tenant out, and that's when I saw that there were some places where family members, if you had a different reason, you could do it, but some of them I don't think you could. So yes. And it's and on the other side of the coin, from the tenant's perspective, obviously it's like hideous to be thrown out into into this housing market. And, I mean, this is honest to God, this is like one way where capitalism, like one of the many ways where capitalism is just kind of failing, it's like, so there needs to be, I think, more government intervention. I mean, that's a different topic, but like more government intervention, and there will be, and people are like trying to have, think about affordable housing, because if it's based on the market, the people who are buying homes at 40% higher prices shouldn't also be, chastised because they're charging 40% higher rents. That would be just like actually breaking even, not, so anyways. Does anyone have any other questions, comments? I think that so then if nobody does, then the last thing I'd want to just say here is that like there are national trends that we're all watching. And literally every time someone's like, it's funny, like most things are just like, oh, here in the Hudson Valley, we're dealing with Airbnb, we're dealing with no contractors, we're dealing with, it's like, nope, this is like 100% national. Like when I go to National Realtor stuff and listen to that, it's like happening all over, and in some places much worse. I was just in Santa Cruz County I've been there a bit for family stuff in the past couple of months. And it's like, Santa Cruz, like you buy like a Caca beach house that's like 800 square feet, or that's like 2 blocks from the beach. It's like literally like a derelict 800 square foot thing. It's like $1.7 million. You know, it's like, I'm like, whoa, like this makes our stuff look cheap, which is what happens when people from California then come and look in this area too, by the way. So this is also, as things get more national, they are comparing them. They're not just comparing it to like, what would I get for $600,000 if I bought in New York City? They're comparing it to what would I get for $600,000 if I bought in San Francisco or like wherever, or LA or Chicago or whatever. So I would say that like, there's like, we look at how then like, what are the local trends and what are like the super hyper local trends? Like, where are there areas that we think will likely increase disproportionately to the rest of the market? You know, and there are those where we know about like projects that are happening or things that are, you know, being built up, or, I mean, there are probably ones that will decrease also because of things like that. But there's nothing coming to mind right now, but we definitely know areas where it's like, if appreciation is your goal, we could steer you in some certain areas. Steering is a very bad word for real estate. I will not say steer. We will give you research and let you know about areas with potential appreciation. And there's like a hyper local market then, you know, so it's like what's happening in Ulster County or what's happening in like the town of High Falls. And then there's like literally the specific property, which then when you get to the level of the individual property, it becomes not local anymore. And this is what's strange in some ways, because we see that, and I've mentioned this before, like 80% of our buyers are kind of location agnostic. They're willing to get a house in Livingston Manor or like Woodstock or Red Hook or whatever, as long as it's like a cute house near some cute restaurants. So the weird thing then becomes like, okay, so if we know like 12 areas that are super cute that a buyer can look in, that a specific buyer can look in that would fit their criteria, then all of a sudden the homes that are an hour and a half away from each other experiencing very different local market conditions are going to be compared by the same person. And that's what we see time and time again. So you have this like weird like layer of well-designed homes that have some certain shared characteristics that you cannot, and this has been like that for us for years, you cannot look at, and this is where homes are less likely to appraise and all kinds of things, because the local market conditions are not relevant, because the people are not just looking locally. I will say as a last note though, appraisals have been good recently. We have not had as many problems with appraisals as we did. Ish. Except for sometimes. We will send this out. Oh yeah, Scott, that's great. So if anyone who, Scott just wrote the recording is going to be posted to YouTube and we'll put it in the newsletter. And then we'll have a link in the IG bio. And then we should try and figure out how to send it to everybody who registered. You know, I know we always talk about that, but so, you know, we'll put it on a list of to-dos to figure that out. But the newsletter is great too. If you're interested in the market, then even just seeing like what happens or what's coming and what the prices are is helpful. And we have a lot more, like we have our little listing alerts, but we have a lot more tips and like things from our team that should be pretty interesting. We are going to also we've been talking about starting to publish this. We haven't as a team published the sold prices, and that's like not something that generally happens, but we were thinking that that might actually be pretty useful for people as they're looking at the market to say like, this home sold and it was listed for, you know, whatever, and sold for X amount. So I think we might we've been talking about doing that. So I think the, takeaway is that it's always a good time to buy or sell if you want to buy or sell, unless you're like literally just like a pure investor, and that's it. Like you're going to be fine. Like just now it's like a little bit less frantic, but you're going to be fine either way. I do think sellers have to work a little bit harder to get the homes ready to sell. I think that part is probably true. I think the buyers who can like fight through all this, like, kind of like bad news are going to be the ones who end up getting awesome deals. Or who can like jump on some of the amazing, like there's some really good new construction projects, Neville House Stone Ridge being one of them, but there are others for sure. And yeah, I guess that's it. So thank you guys for spending Saturday morning with me. And I guess we'll hopefully see you soon.
Thanks.